let's pull up the gold chart and just see what kind of levels are you seeing for gold? How low can we go? Like we
The limbo. Let's yeah, so if we take a look at the gold chart. So we've been looking at this for a while. There's a couple different patterns that played out. We initially had the big drop in gold back in February. And then it had this bounce, and based on that move, we did see gold complete its first move. So it had a sell-off, it had the bounce, it said it was going to come down to this 100% level, which it pierced through. Now that, since that pattern is done, we now have to regroup and take on the next move. So we have this initial drop down, we have this bounce, and it shows where gold should fall to based on momentum, based on how the money's flowing. And 618, this is the golden ratio. This is the first level. Typically, if you get a bounce at the 618, you almost always go down to the 100% level. So we're looking at 3,600 for gold, which from where we are today, that's about another 10, 11% to the downside. That would be a very good measured move. I see this as bullish. A lot of people don't want to see it, but I think it's actually the best thing that gold could do. It would be a multi-wave correction. It will unwind this whole phase right here, Daryl, this whole phase where it became the kind of euphoric blow off, everybody chasing price, gold's going, to 10, 12,000, whatever. All these people who got in late, technically you should have been in gold, at the beginning of the super cycle, which is 2019. So anybody who piles in and chases here, the market is going to try to test them. And it always tries to shake them out by pulling back, preferably to below where the majority of people piled in as the emotional trade. If it doesn't shake you out, it will wait you out, and it can take a long time. And if we go way back on the chart and look at gold, we can see that not only did gold back in 2011 come around and try to shake people out with a big correction, but then it took forever. Took 14 years. It took a very long time to break out and start to move higher. And so that's what most commodities do, and assets for that class. It tries to shake you out. It tries to wait you out. And right when most people give up is right when it starts to turn a corner. And so I think that's what we're looking for gold. Right now it is in the shakeout phase, and then it's going to try and build a base, and you'll get tired of it because there'll be other sectors rallying without you, and you'll be like, gold is just killing me, or silver, and these miners are underperforming. And then you give up on them, and then you go chase the shiny thing, right? You jump into Micron today on good news, and then you see Micron, the shiny thing, fall, and then you see precious metals, something start to rise. So right now we're in this phase. Gold's out of favor. It does have the long-term trend still trending higher, but the short-term trend is down. So we have this mixed signal. And when you have a mixed signal, you really shouldn't mess with it because you're just taking on risk and you're wasting time. It could take 3 months to recover. It could take 13 years to recover. And so that is what we want to avoid, right? Like we moved out of gold above 5,000. We moved out of silver at 111. And now we're looking for these technical levels to, as a long-term investor, buy back into the precious metals space if we dip down to these extreme levels. So that's kind of what I'm looking for gold. And I have a feeling we could hit this sooner than later. I think we could hit this potentially in the next, few weeks or few months, depending on how this market unfolds from where we are. It could hit it in a couple of days, to be honest. That's the way this market is moving. So there's a lot of volatility in this space, and that's the downside target for gold. Now, the flip side is if gold does
on this side of things. So curious on the gold chart. So gold's trading below its 200 moving day average. I'm curious what are you seeing on the RSI? Like, is it oversold at this point? Just people may be wondering, like, okay, obviously, if gold drops to 3,600. I'm going to be buying, more, but people may be wondering if gold's oversold right now. Is the sentiment too low? It is trading below a lot of the moving averages and such. And so curious in your thoughts there.
Yeah. So, it really depends on your time frame. Like saying oversold, I would say today gold is oversold on a swing trading perspective or a momentum trading. It's kind of just poked to a new low yesterday. It's oversold. It could bounce, but that is like over a 1 to 3 day window. It might have a tiny little technical bounce. Overall, I think oversold, I think is going to be that 3,600 mark. When we see this red continue to extend all the way down to about 3,600, that to me will be like, okay, now it's oversold. It's also at a technical target using Fibonacci extension. It's also going to be entering into this phase right here, into this support level as well. So it'll come down into this area. So that to me, 3,600 is going to be a very good point to re-enter. If we get here, that is when I'm going to be looking to move in, because more or less I can buy in at a sharp discount. And then of course the next move up in gold potentially is about 8,600. Depending where it bottoms, it's about 8,000 to 8,600 an ounce, which is lots of upside. It's a pretty easy double from 3,600. And so that's what I'm looking for in the precious metal space. And so as a long-term investor, this 3,600 to me is like the sweet spot. That is the oversold. But if you're a short-term trader playing these bounces, then it is a very different story, right? Right now, as a short-term trader, I would say like, this here is an oversold level. This here is an oversold level. One of these was an oversold level. It's usually when you have a big red bar that's stretching down. Now, this one recovered by the end of the day, but down when this would have been an all red bar. It's these long extensions where there's elevated volume. Usually that's when people are panicking. That's when they're short-term oversold, and you get these knee-jerk reaction bounces. But they only last for like 2 or 3 days. And that's the key, is what time frame are you trading?
Mm-hmm. Okay. And having this conversation, I mean, you were on the show. I mean, you came to the conference, you're like, hey, this is very euphoric and everything. And you were warning people like gold's going to sell off, and just being here today, seeing that happening, it's like, hey, Chris was spot on, with this coming to fruition. And so, I'm thinking about like the longer term. So some investors are thinking about the longer term. They're thinking about gold should be at 10,000. You have all these bullish calls, debt and deficits, so many different fundamental reasons of why gold should be higher. And so what is the possible upside, once we hit that downside target of 3,600, or even if it reverses now, what are you seeing there?
Yeah. So if we take a look at gold, so the most bullish case that I have on gold right now is simply taking the low from 2015 when we had the super cycle low in gold. It's now had this huge rally up to this peak. And if gold was to find a bottom right here, we can gauge where that upside is, right? So that is about 8,600 per ounce. Now, obviously, if gold pulls back to 3,600, if I pull this pullback down, it obviously pulls those targets down. So in a perfect world, we see gold roughly hit, between 8,000 and 8,500 over the next couple of years. We see a pullback, it builds a launch pad, a base, turns around and screams higher. So that is the most bullish case that I have. We could look at a closer, more higher momentum play, saying, okay, let me just grab this tool.
That was a huge move when you look at all those green candles right there.
Yeah, it's a huge move. If we look at the most recent where it rallied up, it's having this initial pullback. Even the most kind of recent move almost has the exact same target. So depending where we step back, multiple time frames, like a 10-year cycle versus a 2-year cycle, both of them are pointing to the same price. And so that gives me conviction. When you have multiple time frames saying, hey, they got the same targets, the same type of potential, that is likely, where they're going to go. The flip side of that is also where is the downside? If we go from the super cycle low and we use Fibonacci retracement, this is telling us, based on the run up, what are the levels where gold should pull back naturally that is still bullish? And that sweet spot is between the 38% and the 50% correction. So that is this blue box, which happens to be 3,300 an ounce up to 3,800 an ounce. So based on the long-term upside targets, we have confirmation that those are where we're going to run into some ceilings when we get there. Based on the short-term daily charts and the downward momentum, it's saying we should see gold pull back to 3,800 all the way down to about 3,300. So obviously, in trading and technical analysis, investing, it's part science. It's part science, part skill. You have to analyze everything. It's a range. Everybody always wants, like, tell me exactly what to do and what price do I buy and where do I put my stop? But everything's kind of, blurry. You have to give wiggle room. You've got to give a range. And so, I would expect gold to come down to 33 to 3,600. And then we're looking at, 3,400 up to about 8,000 and change going forward. So that's what a long-term investor should have their mindset set at. And if it drops down into this range, to me, that is the part where you accumulate, right? You start stacking. We're getting close to that level right now.
Yep. Yep. And that level is higher than where it was. I mean, depending on how long folks have been buying the metal.